Welcome. This is your daily dose of daily market wisdom with Master Trader Nick Santiago. I'm Kerry Lutz. Today is May 21st, 2020, and this is show number 39. And Nick, great news here in Florida, especially if you're a punter, as the Brits would call it, or a gambler, as we call it here in the U.S. The casinos in Florida are opening up today.
Yeah, that's tremendous news, and that's great to see. They bring in a lot of revenue for the state, and again, it's just good to see things opening up in general. And with these casinos starting up again, that's a big pop for the state of Florida.
Yeah, and you got to figure they're going to open in Vegas shortly because, you know, the one thing we know for sure in Vegas is that the casinos run the state effectively, and they always have since casino gambling became prevalent. So, and they're opening up again in Louisiana and in Mississippi, other states where casino gambling is big. So we'll see. And it's sales tax. It's so many different forms of taxation. I guess in Florida, when they open the theme parks, then we'll know we're back.
Yeah, once we get the Disney Worlds and the Sea Worlds and all of these places, Universal Studios up and running. I think Universal's actually already up, so that's good to see. I know Disney is starting, and then we start to see traffic build up in that area. You know, Central Florida, the Orlando area. That would be great to see. But I have to say, I'm out on the road a little bit. I ran out yesterday to the bank. I was really impressed by how many cars were on the road. I just can't believe how quickly we went from a ghost town to a full town. And that's a real blessing, and it's really good to see right now.
Yeah, I know for myself in my area, literally last week I could just ride down the middle of the street and not have to worry about any cars. Now the cars are back and I'm back on the sidewalk. So, so jobless claims go up again this week, a little higher than expected. But you think we flattened the curve
Yeah, yeah.
on
Well, the
joblessness?
claims they were still, up to 0.43 million, but much lower than the 3.5 or 3.6 million we saw last time. And I said this week we would see a much lower number, and we got that. The number's decreasing, and that's a good sign for recovery. And as the economy starts to slowly open up around the country, this number should fall even further. So I would expect an even lower number next week. And if some of these blue states would just start to get their act together and open up a little bit, I mean, it's really concerning that we have to still hear about people that want to be shut down forever. I mean, it's ridiculous. You got to start to open up, and now we know a better model to follow, and that's quarantine the elderly if they need be, and anybody with pre-existing conditions should stay at home. Let everybody else go back to work.
Yeah, yeah, it's so true. And first they said we got to flatten the curve. We've done that. The curve has been reversed. New cases might still be going up nominally because testing is increasing. Initially, new cases were going up geometrically, testing was going up arithmetically. Now we're to the point where new cases are going up arithmetically and testing is going up geometrically, which tells you that the actual problem itself is diminishing. Whether there'll be a second wave in the fall or the winter, I don't know, but it seems like the treatments for the COVID-19 much more effective now, and really it's just a matter of time here, and it'll be interesting to see the curve get reversed on unemployment once all of these people who've been furloughed start going back to work.
Yeah, and another thing I saw also, I was reading, is that people staying inside were getting more COVID than people going outside. So I found that to be pretty interesting. But let people get back to work, let them start producing again, and everything will take care of itself. Let them learn a little bit about nutrition and how to protect themselves. I mean, we don't talk about that. There are a lot of things that you can do naturally to protect yourself. Maybe you'll get the virus, but you may not get a cytokine storm, which really affects the body. So, it's amazing how we don't promote that. I don't see Dr. Fauci out there promoting that. I don't see him telling anybody to take some vitamin A and vitamin D or even a little vitamin C. I did a little research on him and his gimmick a few years back, and the guy was promoting vitamin C about 6, 7 years ago. I never heard him once say it now. So it's pretty amazing.
Yeah. Yeah, for sure. Vitamin D, definitely. We've seen that when they've done testing on people, many of the people that get it really badly have extremely low or depleted levels of vitamin D. Well, I'll tell you what, the retail stocks, some of these retailers need a lot of vitamins as well, a lot of vitamin therapy and vitamin C for cash.
Well, I got to say, the companies that have done well right now and holding up well right now, you got companies like Home Depot, Lowe's. I mean, even through the entire time that there was a shutdown, those stores were open as they were labeled essential businesses, and they have done really well. Today, TJ Maxx came out with earnings. Stock is holding up really well right now, at least from what I can see, and moving up, in fact. So that stock's up nearly $3. It has faded a little bit off of its highs, but nonetheless, it hung in there, and it's been a strong name. Best Buy reported earnings, nothing terrible there. In fact, their online sales were up 150%. Walmart, Costco, Target, these are all strong names still. So, I'm looking at some others, and I know we talked about it last week, but Dick's Sporting Goods, this chart is really holding up very, very well. And I'd love to see a little bit more consolidation. I might jump in on board that name. You got other stocks out there like LuLuLemon that are, at new all-time highs or about to hit new all-time highs. So there's some actual strength in a lot of the retail names, even today. When you look at the XRT, which is the S&P 500 retail ETF, I mean, that's up 43 cents. Now, it may not sound like a lot, but it's a little over 1%. So again, retail right now, surprisingly, is holding up well. Now, with that being said, we've had some retailers file for bankruptcy, but those companies that did that were already in very, very bad shape anyway. So you had, J.C. Penney, Pier One, J. Crew, Neiman Marcus. There's a few others as well, but they were all already in trouble. So again, it almost comes down to survival of the fittest, and we're seeing that in a lot of those names that I mentioned earlier.
Yeah, absolutely. And like you say, many of these companies, I mean, Pier One filed for bankruptcy before the whole thing broke, before the pandemic. And this is just the final nail in the coffin for a lot of these companies that just, for whatever reason, not able to keep up with the times, not able to stay relevant to the market. And it's just what you come to expect. So, hey, looking at gold today, looks like the pullback that you were waiting for in gold and silver. So we're setting up for the next buy, aren't we?
We are, but this is great to see. You don't want to see these things run away in a parabolic fashion. When they do that, the move is over. But today we got a great sell-off in gold, down $36. And like I said, don't chase it because it's going to come back in. That's just the way it works. And, so many emails were coming into me over the past week. Hey, are we going to get back into SLV? Are we going to get back into SLV? I was like, we just got out of SLV a few days ago. Why are we going to get back in right away without a setup? And, the response is because it's going higher. And it just goes to show you, John Q. Public always wants to buy the highs. I don't buy highs. I buy things when they are set up for me and they are on sale. Nobody likes them. Nobody wants them. That's when I want them. And you'll even see silver today, SLV down almost 4%. Silver futures today down over 4%. So we got a great sell-off today in gold. We got a great sell-off in silver. We got a great sell-off in gold mining stocks. Gold mining stocks, the GDX today is down, 4.6%. These are all things that I've been in this year a few times and made tremendous money on, and I'll get back in them again. But let these charts set up. They always give you that chance again. Don't chase them. Sometimes, they'll get a little bit ahead of us, or they'll go further than we originally thought. Like I got out of SLV and it ran a little bit more. It's okay. I understand that. I'm not going to always sell every top, but we made tremendous money, and that's really the bottom line.
And when you look at some of these miners, they've doubled. The GDX has doubled since its bottom, so it was due for a pullback.
Absolutely, and you're going to get it. I try to explain this to a lot of my members that want to be in 100 positions a day. And I say, I'm never going to be in any more than 5 or 6 swing trades at once, right? So that's how I allocate my position, because I go through a big, long list before I get in. I go through a checklist, and I look at every stock. I look at its cycle. I go through all the mathematics, highs, lows. What does the pattern tell me? What does the bigger pattern tell me? I go through all of these different metrics to figure out when these trades are going to be good opportunities. And most people just want to be in something for the sake of being in it, and that's called gambling. As a trader, I don't gamble. I have the odds in my favor every trade that I'm in.
Yeah, well, for sure. And silver, these gold stocks, like you were saying, a lot of them have doubled. There was one stock that I mentioned to you, Sandstorm. I don't own it. I've worked with them in the past, but not currently. And that stock was down to $4, and you said it's a screaming buy. Of course, I didn't buy it, and it was over $8 yesterday. So, that's just a perfect example of what we're talking about. The broader indices seem to be pretty stagnant today. They're not doing a whole heck of a lot.
Yeah, and that's a good thing. So we don't want to see the markets go up every day. If you recall, yesterday was a pretty solid day for the markets. They were up across the board. Today, usually after you have a big up day, the next day will be more subdued. It'll be a little bit more quiet. Sometimes you'll retrace a little bit. Sometimes you'll go flat. I'd love to see a week or two of flatness. I'd love to just see a flatlining market, and that would tell me that markets are going to go a heck of a lot higher. So again, we don't want to see markets go up every day. Same thing with gold. People don't realize, but when you take a look at, say, gold futures, we were just up last month. We hit a high of 1788. And, when you go up in that quick fashion, you need to pull back. You need to work off what we call an overbought condition. And now we're starting to see it. If you take a look at gold futures, really since you can make a case since April 14th, it's been going sideways. So you want to see that. You want to see that sideways drift. You want to see pullback days. You want to see some sell-offs. That's what we call a healthy market. A market that screams and runs away to the upside. It's going to be, hence SpaceX or Galactic Space or one of these companies that put in that, skyscraper type tower, and then they just collapse. You don't want those patterns. You want steady upward trajectory. Go up a little bit, pull back a little bit. Go up 2 steps up, 1 step back. We get that dance step. You are looking at a perfect tango for money making.
Hey, so what about McDonald's? Went up like $4 yesterday. I mean, it was really a runaway. Now it's down a little bit. Little retracement today?
Yeah, so I always tell them to my members, we set it and we forget it. As long as the pattern is good, we don't even worry about it. We're not going to babysit it. Today, it's down 45 cents. Yesterday it was up $4. So that's good action. That's what I want to see. I want to see a stock that runs up, then retreats a little bit. Then it could retreat for a few days, builds a base, then makes another advance. That's good action. So I love the McDonald's chart, one of my favorite charts out there.
Yeah, so you think you enter it now, or do you wait a couple of days?
Oh, I've been in it, but when we talked about, got to remember when I brought McDonald's up on the program, this was around 174, 175.
Right.
It's now 184. So yeah, see if you can pull back a little bit, get back involved. But if you want to get in here, I don't even have a problem with anybody doing that because I think the stock's going north of 200.
Yeah, you wouldn't believe the comments that we got on the YouTube channel about McDonald's, and I won't even go into it, but they were quite entertaining and funny. But yeah, it just makes sense. They never really closed down, so I can't believe their earnings are going to take that bad a hit when they do announce them. Who knows? But now it's a full steam, Big Mac ahead, right?
Yeah, and I don't even eat at the place. So, to be honest, for me, it's just a trade, right? So I don't care, what a company does, what a stock does. All I care about is, does that chart pattern tell me the stock can go higher? Does the chart pattern tell me the stock can go lower? That's really all the nuts and bolts inside of a trade. And again, I don't think I've had a Big Mac in 25, 30 years.
Good move. Good move. Hey, well, if that's, your health is important, you probably shouldn't have. Once in a while, not a horrible thing to do, but you shouldn't be living on the stuff like way too many people do. So Hotel stocks. We got our big three, big four, Hyatt, Hilton, Marriott, Prime, pulling back a little bit today.
Yeah, and that's what I said. We've already been in Hyatt twice. We made really, really good money via the call option. I'm going to do it again. Right now, I mean, it's doing exactly what I said. We're going to look for a little bit of a stall out, a little bit of sideways action, and then we're going to pull the ripcord on that thing one more time. Again, nothing goes up in a straight line, and even look at Marriott. I mean, it's forming a really, really nice pattern. Hilton doing the same thing, and Choice Hotels, which is ticker symbol CHH. All of these are looking really, really good for, another upside move. So we want to get involved in those names as soon as the chart tells us to. And, we'll be doing that one again shortly. But, it's all about the chart pattern. It's all about patience. And that's the two things that most people that get into this business lack.
Yeah. Well, not having patience in life is a really bad thing because he who waits gets everything, as they say.
The funny thing, I was a young kid. I wanted a moped. I think I was 14 years old. And my mother said, no, you're not getting, you'll kill yourself on that thing. And she probably was right. I didn't get it. But by the time I was 18, I bought my first brand new car for $20,000. And, for those who wait, if you have patience, you put your eye on the goal and you set yourself to get that goal, you'll achieve anything you want. So it really is about having patience and keeping your eye on what you really want to achieve.
All right. So 2 more sectors, and then we'll call it a show, and we'll wrap up tomorrow on Friday. But airline stocks, Southwest among them, what's it telling us?
I mean, the airlines have taken off. I mean, if you look at it, when I talked about it, down around $25 or so, I said, this is the pattern where you got to get in. I doubled down at that level. Now the stock Southwest is at almost $30. We're looking at all the airlines doing much, much better. Alaska up $1.19 today. Delta is higher by 60 cents. So we're looking at some pretty good action in the airlines. Yesterday, they had a pretty decent day as well. United today is up $1.18. So you get the economies going. I have a friend that I really talk to almost virtually every single night. He flies across the country on a daily basis, and he's telling me these planes are getting full. So I love what I'm hearing, not for his sake, because he was really enjoying the empty plane. But I have to tell you, the planes are starting to fill up, and that's really the bottom line.
And they'll start coming out of storage. You look at airports around the country, they were just stacked up like airplane parking lots. Like there was a shot of Pittsburgh International Airport, hundreds of planes just scattered about. Like I never saw anything like it before. So airlines and oil's up, right?
Oil's up again. And I was on the show, this whole week saying 33 was my target. We're at 34 right now. So, I mean, crude has, continued to just steadily climb. Now, what I want to see for crude here is the pattern. I want to see what kind of pattern this makes over the next 5 to 7 days, and then we'll reevaluate. But if we start to see just a sideways pattern, crude's going into the low to mid 40s pretty fast.
Yeah, and that will shock all of the so-called experts, won't it, Nick?
It certainly will. It always does. And again, like I always tell people, don't even listen to me. Listen to the chart. Watch the chart. Learn how to read those things. Tonight, I'm going to be doing a class on 3 different easy chart patterns that make money consistently. And again, if anybody's listening, you want to come out, just come on over to the website and check it out. But I mean, learn these chart patterns. It's what it's all about. I mean, it really is. It's not that difficult. If you put the time and effort in, anybody can do it. If I did it, anybody could do it.
Hey, so to attend that webcast, how do we do it?
Yeah, just go over to the In the Money Stocks website. You'll see it right on our blog. There'll be a sign-up page there. It is a small fee for this course. It'll be about a 2 or 3 hour course. But again, I try every couple months to do that for everybody that wants to learn. This way, they see exactly what I'm doing. There's nothing I do that I don't show anybody that they can do. So again, that's available for anybody that wants to sign up.
And if you can't make it tonight, is there a replay you can get?
Yeah, there is. If you purchase it, you could watch it for 30 days. You get 30 days.
Cool.
You can view it as much as you want, 100 times over. And again, review it, review it, review it. That's what I always tell all of my members.
Yeah, that's the only way to get good at things is to invest the time. It's funny, I was talking to Rick Rule, who is the master of resource investing. Of course, he's a total professional, but he said for each stock, a mining stock, and he's going by fundamentals, for each stock you own, you should spend an hour a month reviewing all the company's filings and all this. So that's one way of doing it. Of course, the other way is to view the charts because the charts don't lie. The charts are universal, and the charts show everything.
Yeah, what a chart is really just a footprint of human nature. So what are we looking at? We're tracking money, and I've discovered so many different things looking at stock charts about companies, about certain individuals, more than I want to divulge here. But it's amazing what following the money will do, and that's all we do as a trader. We're just following the money.
Yep, follow the money because the money tells the true story, not the media. Because a lot of times the media will be telling you one thing, but the money will be telling you something else. And what about the concept of insiders selling shares? Is that something you pay any attention to?
Yeah, I'll look at that from time to time. Generally, when I really look at, say, insider trading or any insider buying, is really when I see that stocks are at all-time highs, and I want to see, hey, are these insiders starting to sell? Is the CEO getting rid of some stock? So I'll look at that quite a bit. Every day, I usually will go over a little bit of insider buying, whether it's insider selling or buying. I'll give you, for instance, today. One thing I saw was the company SPCE, which is that galactic space. You had a 10% owner sold about $29 million worth of the stock. So that catches my eye right out of the gate. And I say, wow, why is this guy selling stock? And then I look at the chart. The chart really looks awful. So now I see why he's bailing. So, that's something that I pay attention to. And again, I do look at that stuff. There's so much to it that I look at each and every day.
And for good reason, too. Hey, you're a true student of the markets, Nick, and of the charts for sure. So you want to figure out how to do this? You want to get an idea? Go over to inthemoneystocks.com. You can see Nick's up-to-the-minute trading record, which is quite impressive, as well as a lot of other important and very valuable information. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01 and at Kerry Lutz. Nick, we'll pick up where we left off tomorrow. Happy trading.
Thank you.